There's been a huge token burn for Woo Network. This is a centralized exchange that also has DeFi applications as well. Quite an interesting one. I've covered this previously on the channel. If you want to have a deep dive on what exactly it does, check out the video I'll just post above here right about now. But as you can see, it's up 18% today. We just had the good news that Fed Chairman Jay Powell will not be speaking on anything economic today, as most had feared, and so the markets can continue green here. Woo Network is up 18%. Now this is down to that huge token burn, and they've already changed the numbers here over on CoinGecko. This previously max supply was 3 billion tokens, now down to 2.25 billion. So let's jump into this and see the kind of addressable market here. So these are all the centralized exchanges. As you can see, Woo is quite a bit down here. It's ranked 104 out of all of cryptos. Current market cap just under $300 million. And you can see the likes of Gate has almost a $500 billion market cap. Tokenized Exchange, KuCoin, 500-600 mil a piece. And some of these competitors up here potentially won't be around that much longer. Huobi with a load of instances recently that are making people think their number may be up. This, of course, after factoring in the FTX blowup, there is room for growth in the centralized exchange space. So the question for altcoin traders, can Woo go from the 9th biggest exchange maybe up to 3rd or even 2nd during the next market cycle and reap some serious rewards for token holders? Well, this will certainly help. So Woo have now implemented a huge token burn in a first series of steps to improve their tokenomics. So nothing concrete as to what the tokenomics changes are going to be. Just all we hear right now is that 705 million Woo tokens have been burned, which equates to around 24% of the total supply. So a rather big shock here. It's been a while since I checked in with Woo, and it has been quite pleasant to see all the different branding they are now shaping up with. Things are looking a lot more degen, definitely crypto Twitter friendly, and I have to say I approve with some of these designs here. So the reason for the token burn, they say optically sound tokenomics combined with unparalleled transparency is a recipe for success they're trying to move towards. The community argument was the fully diluted valuation of Woo was a lot different from the current market cap, thus the inflation was just way too high. So this is why they've stepped in here and did a big token burn. You can see this over on Etherscan here. This is the burn wallet. 750 almost million tokens have now been burned. Previously, what they were doing was taking their monthly revenues, buying back and burning Woo tokens, as you can see, 30 days, 60 days, 90 days out. But this has now been deprecated with this major change here and this huge burning of the network token. So let's run through these changes and why they have happened. So 24% of the total supply has just been burned. This comes from the following breakdown: old insurance fund, the venture tokens, and also a DAO treasury. So let's see why this has happened. And you know, some of those things might ring a few alarm bells. Surely you would want an insurance fund in place, for example. But starting off here with the Woo Ventures side of things. So what they're saying here is there's a lot of dollars in VC land chasing the same investments. And they say there's relatively few actual good projects they could invest into. And so what they're going to do is deprecate the Woo Ventures arm, as they didn't see it providing that much value. They're just going to focus on their core thesis, trading. As a result of this, they are burning all the tokens in that particular pot, which comes to over 147 million tokens. They also had a DAO with a load of tokens in it. But what they're saying here is that the DAO will be deprecated and now they have a Woo force. So you might see a bit more in terms of their community speaking up and being a bit more vocal on Twitter, social media, etc. And they've really tried to garner an identity here under the Woo Force brand. So Woo DAO is now Woo Force. So all the Woo DAO treasury tokens, 259 mil, have now been burned. Subsequently, there will also be 5 million tokens going to the Woo Force operational budget. So expect to see some troops on the ground in social media. And then they've also posted about this, the insurance fund. So 10% of total tokens were set aside for an insurance, a rainy day fund. But instead of utilizing this, what they're doing is doing a proof of reserves. They've got a live transparency dashboard here. You can go in and see it. It says it updates every 15 minutes with live data. Assets over 80 million, liabilities 53 million. Check that out for yourself. In the following breakdown of these tokens, stablecoins around 55% of that, Bitcoin, ETH, XRP. And so they don't think they need all these tokens now for the insurance fund. Maybe they over allocated when they first started out. And that is almost 300 million tokens that they've just decided to burn. But what they're going to do is allocate $10 million worth of company-owned stablecoins and set those aside for a compensation fund. So for example, a hack or there's a loss due to a counterparty, then this fund will take the brunt of that. So here we have the current state of play. Token distribution, roughly 72% now circulating, an active supply of around 43% of that. The rest in terms of ecosystem rewards are vesting out. But what they've done is change the schedule for these, so a brand new contract has been set up. Those ecosystem rewards will now vest in a time-locked smart contract over a 5-year period, but they will be held in custody in order to incentivize network adoption for Woo at a later date. So maybe this will be their next bull market marketing fund. Think liquidity incentives, so on and so forth. They have both the centralized exchange and decentralized, as I'll show in just a second. And then in terms of locked Woo tokens, 27% still locked, team advisors around 10%, some still to vest for those Series A investors, and also future team and investors, there's an allocation for those. Now I thought it also worthwhile to quickly go over their Q1 roadmap here, as they did post this around Christmas time. So this is the roadmap ahead. They're going to be adding things such as a TWAP feature. This is where you can get in based on an average price over a predefined duration that you can set. That's a really good feature for DCAing in, DCAing out of the markets. They're adding USDC spot pairs along with Bitcoin spot pairs as well to try and remove any anxiety around USDT trading in case that collapse. They're also bringing out some earn products. And over on the DEX, the WooFi DEX, perps will be enabled, and the staking relationship as well is going to change, which I'll jump into in just a second as well. I think this brief sentence pretty much sums up what they're after here. The second half of 2022 witnessed a violent transformation in the cryptocurrency space, leaving a market share vacuum. So that is what they're trying to plug here. They want to be one of the biggest exchanges, and with the removal of other competition in this sector, this makes it a lot more easy. So they're taking the steps here to really push themselves to the forefront. Now they also have an Asian dominant user base, which will be very interesting indeed, as this is one of the key areas for growth for the next crypto cycle. Many big hedge funds and investors are starting to invest in China, and so it would make sense if there's going to be more adoption in the Asian markets. An exchange that has an Asian facing front could do very well out of this movement. As I say, check out the video just above on the fundamentals behind Woo, their team, where they're from, and their expertise. Very interesting stuff. So exhibit A here is the centralized exchange WooX. They have very deep liquidity on here. These guys are out and out traders themselves and do huge volumes, and so you'll find typically the order book is rather deep. This is very good for whales and larger size traders. Then we have WooFi. This is the decentralized exchange. Just connect your wallet. Works very similarly to Uniswap. As you can see, it's across a load of different chains, and currently 77 million Woo tokens are staked on this, as you can get some of the fees generated by this protocol. The current APR over the last 7 days works out to be around 4%, and what they're doing is making a unified staking model, so you don't have to try and chase yield across these different chains. As you can see, they fluctuate dependent on where the traffic is, but they're going to have this unified in one staking portal, and the APR consistent no matter where you stake. So a pretty useful dApp here in DeFi. Avalanche, BNB, Phantom, Polygon, Arbitrum, and Optimism it's already tapped into. So multi-chain narrative, tick. So of course we've had a big pumperoo here, 18% up today off the back of this huge news with a massive token burn. Levels I'm now watching around 21 cents and 25 cents. I think that really does clear up the chart. If you enjoyed this update, like, subscribe, comment down below if you're a Woo fan, and I'll see you guys in the next one. Peace.